Hello, Joey.
Hello, Mark.
Episode 89. Are you feeling hungry?
I know. I am feeling actually legitimately.
A little peckish?
Yeah.
Should we talk about chips?
I did not know where you were going with that.
Should we talk about some chip reverse mortgages?
Yes, we should.
Now, would you say it's Lifeline or Landline?
Ooh.
Find out.
Find out soon.
In episode 89. Woo! You're going to learn about our mustaches, where we ate, reverse mortgages, why we're rocking Leafs jerseys, and more.
And more.
All right.
All right. Welcome to the Toronto Livings Podcast, a conversation about all things Toronto with a focus on real estate, the culture, and of course, the food.
I'm Mark Savell.
And I'm Joey Virgilio.
And we're realtors with Sage Real Estate working together as a Toronto Livings team with a focus on helping you buy better, sell higher, and of course, having a little bit of fun along the way.
Mr. Mark.
Mr. Joey.
Look at this.
Bleed blue, baby.
Bleed blue.
We got the two biggest believers in the city right here. And what a coincidence. We both got...
both Matthews jerseys.
Big Poppy, yeah.
There
Austin
we go.
Matthews, yeah. This looks very good on you.
Thank you. You too.
Thank you. Thank you.
Look at that.
Yeah, all proper. We got our...
Oh, and both of us don't have the C's on them.
Yes. No,
Yeah,
I know.
old school.
Well, if they win it, I'm buying you a C.
Yeah.
I'm even going to buy you the little milk logo.
Yeah.
So it's like proper.
Oreos and milk.
Yeah, there you go. Oh, man, what a week.
Yeah.
It is, it's quite the, lot to celebrate.
Yeah. Yeah. There's a ton going on right now. First thing to celebrate is Mark's mustache.
Oh, hello. Forgot that I brought this to the show. With
Yes,
me
you
today.
did.
Yeah. I cheekily joked on Instagram if we should grow playoff mustaches. And do you want to guess what the results were?
No, I actually don't know the result. What are they?
It was a resounding yes.
Okay.
Yes. So we've been challenged by the thousands of listeners in Toronto Livings land to grow out playoff mustaches.
I'm going to have, I got a slow start here and it's probably going to stay slow. Let's be real.
Yeah, you're not a big mustache guy.
I'm not a big facial hair guy. I've been trying to grow it since I was like 16 years old. When I was 16, I was in grade 8 and I saw somebody with this straggly.
Sorry. When you were 16, you were in grade 8?
No. I was trying to grow it since I've been 16, but probably earlier. I was just throwing an age out there.
Okay.
Yeah. But when I was in grade 8, I didn't get held back that much.
I was like, go on.
When I was in grade 8, I saw somebody have this like really straggly little soul patch. And I was like, man, that looks so cool. I want one of those. And I've never been able to get it to happen.
So for the last 45 seconds, I'm just staring at your upper lip. I cannot stop staring at your upper lip now. I'm like, what's this going to look like when it's...
It'll be a mystery to you and me both.
All good. I think what you should do is like go super short on this. So any stubble, like all focuses on upper lip and not reduced to lower chin areas. But we're both sons of fathers who can grow really good mustaches.
Hardcore mustache dads. Yeah.
What's up with that?
100%.
Yeah.
Yeah. I don't know. Can't...
You might just be a late bloomer.
You know what? I'm hoping on that.
I'm a believer that you're a late bloomer and this mustache...
This is going to be the one.
That just comes out. I guess Molly's never had a chance to experience this.
No.
Okay. Adriana S. hates it. Hates it. But when I told her what it's for, that this is for the Leafs playoff run, you know what her response was?
Let's hear it.
Bleed blue. So elbows up.
We're in.
Permission granted. I told my barber, I'm like, yo, you need to grow me like a Lanny McDonald mustache. She's like, challenge accepted. Let me shape that for you. So yeah, thank you for putting that out.
Yeah, 100%.
If you see some extra hair on us, this is a conscious decision.
Yes.
Yeah.
There's a playoffs stash.
It's playoff stash. We're also going to, I think, try to wear these jerseys. We're not going to say
until the end.
Till the end.
We're just going to call it the end.
I like that.
Okay.
Whatever that end looks like, we're wearing it.
We're wearing it.
I love it. Funny you mentioned mustaches because today's topic is more than just facial hair.
Let's get into it.
But it does involve a mystery of a man who does have really good facial hair.
Okay.
Tom Selleck. You might know him from Magnum PI. You might also heard of a gentleman named Kurt Browning.
Okay.
Canadian figure skater. Who Adriana as worried, please do not disrespect Kurt Browning. Because that was her idol growing up.
Oh, was it?
Yeah, she's a figure skater.
Okay.
Yeah.
Oh my God, Molly C too.
So we better be careful with what we say about Kurt Browning and Tom Selleck. But today's topic does involve both of them because they're both the spokespersons for reverse mortgages. Yeah.
That's so funny because you were talking to me about this yesterday.
Yeah.
And I had no idea what those two people had to do with reverse mortgages.
Yeah.
I had to Google it.
Yeah. Yo, Tom Selleck got sued over it.
Oh, really?
This goes deep.
Oh,
yeah.
man.
So, spoiler alert, we're not talking about Tom Selleck's legal problems. We're talking about chip reverse mortgages.
Thank you for keeping us on track.
Yeah, and how they could apply to you. And somehow these two men got tied into the promotion of it.
Yes.
And hey, listen, when you're retired, we need a little bit of money. So I ain't hating on the hustle.
Yeah.
Do your thing, Kurt Brownie, before you triple cow sow into the wind. Is triple cow sow a move?
It sounds like it is. I would believe it is.
Okay, because I made that joke to Adriana S. and she's like,
What is that?
That's not a movie. What did she say? He could... I always said suplex. It wasn't suplex.
You could suplex like nobody else.
Yeah, that was a wrestling move. But anyhow, I digress. Let's start how we always start.
Okay.
How was your week, Joey? What'd you eat,
Thank
man?
you for asking me.
Yeah.
Because yesterday was such a nice day outside that I didn't want to be inside, period.
Agreed. Hello, spring.
Yeah, it's here. So after the office, me and Molly C got together and we went to go try a new... I've been waiting to try this place. So I've been biting my tongue before I talked about it. There's a new sandwich shop that opened up right close to me.
Lay it on me.
So it is called, and I might butcher this, Arete e Toro.
Ooh. Imagine saying that with a mustache.
If only.
Arete e Toro.
Which I looked up because I had no idea what it actually meant, but I guessed completely wrong. Aries and Taurus.
That's the Latin coming out of you.
Yeah, Latin exactly.
Heritage. I like that.
These are like high quality Italian sandwiches.
Okay.
They're like Italian deli sandwiches, but like done to the nines.
Wow.
So I spent, they're not cheap sandwiches, but they're not bad.
What is these days though?
That's what I'm saying. I guess more in context.
Yeah.
$18 a sandwich.
Fair.
But the amount that they give you, the quality that they give you, they slice fresh deli.
Nice.
Like in front, you're seeing it get sliced.
Running it through the garden.
Oh yes, I love it. And all the ingredients, they do it on this insanely good focaccia bread. So you have this really fresh, tasty bread, and you have freshly cut deli. We got the San Lazzaro and the Enzo were the two sandwiches we got. One was mortadella based, and the other was prosciutto based.
Okay, as soon as you throw focaccia as your base, you could charge me $20 plus.
Yeah.
I'm okay with that.
But they're also, it wasn't like a little, it was
a substantial.
It was a good chunk of focaccia. Yeah. They cut it in half. They give you like a full-fledged box. So it's like a take home.
Right on.
We're going to link it in the show notes. It's on Keewatin, and it's 12 Keewatin Avenue.
Sorry, did you say that's up by you?
It's up by me.
Young and Eglinton area?
Yeah, just north of Eglinton.
Right on.
Yeah.
Right on.
And it's tucked away. It doesn't have any name on it. So if you're walking by and you see a red sign that looks like a really artistic bull, or what me and Molly call it, ovaries.
Yes, I know what you're referring to.
Do you? Okay.
I know the ovary symbol.
Yes.
It is some like zodiac sign.
Is it a zodiac thing?
Yeah, it might be. Well, Toro would be the bull. But
That's
Aries,
what I thought it was. Yeah. Okay. Oh, that would make sense. And then it's like a mixture or combination.
So
of
look
the two.
for
the big red or the small red ovary sign.
Ovary sign. Yeah, and you found your destination. Well, I'll have it in the show notes, so you could just click the link and then.
That's easier, and they have a really big picture of one of their sandwiches right in the front page, so you're gonna get a good taste of it right away.
Right on. So try the Enzo and try the San Lazzaro.
San Lazzaro, and it was those are their two biggest orders.
Like most popular? Or
most popular,
biggest?
sorry.
Okay.
Most popular.
Most common ones.
Yeah.
Right on.
And then we went to the Leafs game afterwards, and we watched we went to Right Wing afterwards.
Sorry.
No, we didn't go to the Leafs game.
Did you fly to Ottawa? Got it.
At Right Wing.
Also mentioned in the previous episode.
Yes, that's such a good place to watch a hockey game. The volume is cranked. The whole crowd is so into it. It was a packed from top to bottom.
Right on.
So yeah, that was my
the energy, the vibes, man.
The vibes were out yesterday.
Just hearing you tell that story, I'm like more jacked up.
Yeah.
I feel like I want to go rewatch the game.
It was, yes. There's another one coming up, so don't worry.
Yes, Saturday night. Yes.
But how was your week, and where did you eat or went to?
Oof, great. I love the way you kind of spun that. So I didn't eat out very much this week because I don't know about you, but we have had Easter leftovers for the last 7 days.
Actually, same here.
Right?
It was a sin ordering food yesterday.
God bless my saint. Saint Adriana S. She made me a delicious lamb leg for Easter, but it's 2 of us. We could have fed like 12 people with this thing. So every day, lunch and dinner, we've been breaking it down. We made wraps out of it. We made like a concoction.
Yeah, you just gotta figure out what you can do with it.
Yeah. So it's been really good. The lamb she made was just, are you a lamb guy?
Yes.
Is it the gamey thing that bothers you?
There's if it's done like spedouche all over the place.
Right.
Or like little lamb legs.
The chops?
Yeah, the chops.
Yeah.
I'm on board.
Okay, she did this leg. It was her first time attempting it, and it was pure perfection.
Love it.
Cooked it. I think she did it for like 3 hours. She had it marinating overnight.
Oh man, she did it up right.
Yeah, so I had more than enough food this week. I didn't need to eat out much, and it was good because lamb is high in protein, and protein is needed when you attend Metallica. Oh my God, it's been the week of Metallica.
Yes, I know.
I'm so stoked by the week it was.
Okay, how was the show? Wait, first off, can we start with the pop-up shop?
Yes, we can.
Okay.
Let's go back. So my dad randomly had a doctor's appointment downtown. I'm like, oh, you're downtown? Do you know Metallica's got a pop-up show or a store? He's like, what? Let's go. Picked him up from the doctor's right to the well. The beautiful well was blaring Metallica all throughout.
Oh, get out of here. They were in.
This should be a year-long thing. I don't think you should limit it to 1 week. Metallica should have its month of its own, the Metallica month. Make it March or something. The month of
Martha Metallica. Yeah, that works.
Oh, it was so good. Like, imagine you walk into the well, and the well has a certain connotation. It's just like dun 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 dun. Oh, it's beautiful. His first time at the well. He was
amazing.
Yeah. There's a place, a dog area. I got a side story. There's a dog area where your dog can do its business. And he's like, genius. All places. He was so amazed by this thing. I'm telling him the technology of the well, the fact that there is a well under there. He's like, but the dogs can do that. This is just so well thought out. So we did that. You put me on it because you showed me a TikTok. You're like, yo, they have this pop-up. We get there. The lineup is the entire basement.
I couldn't believe it. Yeah.
Oh my God. So I'm like, Dad, I am not waiting an hour. I got stuff to do. And he's like, well, I'm retired. So I'm going to wait in this line. Go run your errands. Meet me back here when you're done. Maybe I'll be at the front.
What a good setup.
Perfect scenario. It did run really quick. The lineup, these are 65-year-olds. They're not wasting time. They're getting in. They're getting out. They're very efficient in their Metallica merchandising. We spent God knows how many hundreds on T-shirts and hats and... There was a pinball machine,
amazing,
but we couldn't buy that. You have to enter to win. So we'll see.
We'll see.
Yeah, we'll see. So we did the pop-up store because Thursday night we attended night 1 of 2 of Metallica.
Right.
And we're not going to night 2. Night 2 is Limp Bizkit. My dad's not really a Limp Bizkit guy. So we saw it last night. Pantera opened up. What a concert, man.
Yeah.
Was that the Sky Dome or whatever corporate venue? Rogers Center?
Rogers Center?
Is it called Rogers now?
Yeah.
Whatever. Sky Dome forever, man. They 2.5 hour set. One of my favorite songs is King Nothing. It's such an obscure song. They played it. So I was like, oh, my ears are still shot. Let's be real here. Like,
I love it.
I still am like, huh? Like but Lars on the drums, the way he's like, just, you feel it, man. Rock entered me last night.
I love it. The mustache came at the absolute right time.
I could have picked a better day to manicure my mustache for Metallica. If you get the opportunity, I'll say we got really good priced seats. Last minute seating is a thing for this concert. Yeah, because it's a huge venue. There's 50,000 seats, right? Yeah. So I don't know, man. I might even sneak a... No, I'm not going to go on Saturday. I got to save my money for Coldplay in the summer. That's going to be a mortgage payment in its own. But we saw Metallica. We loved it. Leafs Nation went crazy. You were watching it live.
Yeah.
Reception was spotty, but when they scored the OT goal, all you heard is go.
Everybody's so into it right now.
A chant started in the middle of Metallica. And
during the set.
Facts, the Leaf fans were louder than Metallica.
Oh my God, man.
Well, I mean, in
your area.
Yeah. I was go, Leafs, go. I'm like, no, they didn't. And it was, incredible. I watched the highlights and
amazing. Yeah. It was definitely, wow. It's still old dogs, man. They're still going.
Oh, these guys are built different, man. Yeah. Whatever's in their veins, I hope when I'm 65. They're all like these big barreled gentlemen, polite as hell. Yeah. Everybody was like looking out for one another. And that's what I aspire to be, a big beer belly, but muscular old man. Yeah. These guys are just jacked, man. It's really cool. And everyone's high-fiving each other. And so, me and the rock god, my dad loved it. I loved it.
Love it. That's amazing.
Super, super good. All right. Next segment.
News
we can use.
Yes. It's been a while since we've hit a news we can use.
Yeah. Last episode, if you haven't listened to it, was all about...
It was a big news we can use.
Yeah. A lot of people found it really helpful.
Oh, that's good.
Yeah.
That's good. That was the goal of it. So
yeah. As we said, be decisive, not divisive.
There we go.
Yeah. And a lot of people I had some really good conversations about like different parties, and it was like, vote whoever you want, but this is the platforms, right?
Yeah,
so
totally.
Do your research. Do you want me to get into news?
Let's do it. Yeah.
Because this is like, you can tell I'm jacked.
Yeah.
I'm so charged.
Whenever you're this pumped about news you can use, I know it has to do with traffic.
Oh, it has to do with traffic. Because, dude, it took us 25 minutes to get from Skydome or Rogers Center to Queen Street.
Yeah.
25 minutes.
Yeah.
It's one street.
I know.
You could walk it in 4. So we needed what the city is finally proposing, a traffic czar.
A traffic czar.
Czar, yeah.
What's a czar?
It's one of those words that's spelled like impossible to pronounce.
Yeah, okay.
C-Z-A-R. It's a traffic
czar.
Czar. But I feel like they should get like a nice crown and tiara to walk around and be like, remove your car. Or the Cesar. Well, Cesar you. I mean, okay, so this is good news. They finally appointed somebody to tackle traffic.
Okay.
Because apparently we don't have a singular
thing.
Apparently this is something, a lack that the city has.
That's crazy.
That is absolutely bananas.
Yes.
But we're getting one, kind of. So what they're proposing to do is they're going to have new technology to help move things along more efficient. They're going to help transit move faster. They're going to increase on the ground traffic. Have you seen these guys?
No.
Oh, they wear like neon green jackets and they're like, move your car.
No, I have not seen it.
They're Liberty Village and Strawn. Strawn and East Liberty Village.
Yeah.
Yeah, they're right there to move it along. They're at Bay Street. I've seen them quite a bit.
No, I haven't seen them.
They're not very effective, but they're there. Yeah, they're whistling and like, you got to get out of the box and you got to do your thing. So there's going to be more of that and more coordinating with construction projects to kind of see what's happening. And like, cool, but like... They're not addressing, I think, the core problems.
Right.
And I know it's a little faux pas to say this. I think one side of the city is very pro Cafe TO. I'm not on that side.
I'm not on that side either.
Free up the roads. Like,
I'm so with you.
Yeah.
I get it. They're a little bit of an extra income producer. I understand where that comes from, but oh my God. First off, they're hideous. They block traffic.
They block traffic and like, have you eaten one of those?
It doesn't feel good when you're sitting.
Good.
You feel like you're about to get run over by a car when you're sitting there.
Or traffic's jammed and you're breathing exhaust and you're sitting like, and like how much more seating are they getting? Like 6 seats?
Yeah, I know.
I don't know if the juice is worth the squeeze in this type of scenario. So I'd like to see that, as we both said in previous episodes, get rid of main artery parking. Park on the side streets, maybe bring down the cost of parking, but make it in more areas.
Yep.
So instead of it being $5 an hour, maybe it's $2 an hour.
Yep.
But it's everywhere. So they'll generate more income.
Yep.
Right?
I like it. Better than the Cafe TOs.
Better than the Cafe TOs. I don't think they're making that much from that. I think, you're bringing more income doing our approach.
Yep.
But one interesting thing I saw is they're not going to be charging construction companies for shutting down lanes of traffic.
Okay.
So they currently are doing this. They have to pay like $75 or $76, something like that, for an application fee, and then $40 per 50 meters per day for shutting down a major road.
This is what they're doing or what they're planning to do.
They're going to raise those.
Okay, they're raising.
So that's already a thing.
It's already a thing.
Which I was like, oh, interesting.
I actually didn't know that.
Yeah. So news you can use.
News you can use.
When you're cursing those construction sites, they are paying.
At least they're paying into it.
Something, but they're going to be increasing that.
Okay.
I instantly reached out to my city contact, who is Adriana S., my wife. I was like, I need this job. How can I apply for this job? Unfortunately, it's not open to outsiders. It's going to be an inside hire.
Oh, it's an inside job,
yeah.
is it? Yeah.
Yeah. I'm like, we have the batons ready to go. Me and Joey are like,
so ready.
We
man.
trained for this. Give us the power. So unfortunately, we have to wield that power until a later date. We have to hold it back.
Okay. Yeah. All right. Well, we'll just have to make our way into the system first.
Yes. Slowly.
Which vigilantes are going undercover.
Yes. You also put me onto Severance.
Okay.
And I'm not going to go on a whole wild tangent with Severance, but you just brought that.
Spark something?
Yeah. So news you can use, watch Severance.
Okay.
Yeah. It's very slow burn, but my God.
It gets there, man.
It gets there.
It gets there. 100%. Be patient.
Be patient. Yeah. And the last thing I want to say is Monday is voting day in Canada.
Monday is voting day in Canada. Yeah. The day is coming.
Yep.
The day is almost here.
Yeah. We advance voted last week.
Did you? Yeah.
Packed.
It was record setting.
I believe it. I believe it. It was completely full of people.
A lot of people are, which is good.
Yeah.
Which is good. Exercise your right to vote, man.
Democratic muscles.
Yeah.
I like that.
Yeah.
New listings. Let's get to that real quickly.
Let's do it. Yeah.
Got a really sweet Victorian townhouse up for rent, $4,000 a month. It's 104 Sumac, and it's right in the Lower East Side of the city, just down the street from Sumac Espresso.
Yes. So we did a video on that.
Did do a video there. It's a great little spot. And they also have a unit for lease at Nobu.
Nobu.
Yeah, brand new. I wish I was living there last night because I could have just walked to the stadium.
Would have been nice and easy.
Super convenient location. If you're into sports, if you're into concerts, you'd love this place. We're listed at $3,000 a month. It's a 1+ den, 2 bathrooms, and the den can definitely be a work from home office. It's a proper den.
Yeah,
proper size.
I've seen the size of it. You can get a bed in there.
You get a bed in a closet.
Yeah,
like an IKEA PAX closet all day.
Love it.
There is no parking for either of these listings, but the Nobu one, you also get Nobu restaurant right at your...
You do, yes. Nobu Lifestyles.
Do you know who one of the part owners of Nobu is?
George Clooney.
Nope.
George Clooney, no?
No, not George Clooney. You've done an impression of this gentleman before.
Have I?
You have.
Who have I done an impression of? Was Robert De Niro?
Yeah.
Is it not? I thought it was George Clooney this whole time.
No.
Okay.
Clooney's like in everything else, but not Nobu.
Okay.
Yeah. He's not touched that. That's De Niro territory.
It's De Niro.
Part
Okay.
owners. And De Niro's son is actually a really successful real estate broker in New York City.
Get out of here.
Yeah.
That's
Deep
news.
dive.
That's more news you can use than what that
You
is.
can use. Just given to you all. Well, anyways, if you're interested in any of those 2 listings, reach out to us. We're happy to share more info. And 4 units left at the church.
That's right.
Yeah, 4 units left. I think they're going to be going relatively quickly, and then we are done with that project.
Got you.
Yeah, so fingers crossed that we can get it to the finish line.
Exciting.
Cool. All right. Enough of the banter.
You're right.
Let's get into the...
No, I was about to say news you can use. Meat and potatoes.
Let's get into the meat and potatoes of this topic.
All right. Reverse mortgages.
Lifeline or Landline?
Boom.
Find out in this episode as we unveil the shocking truth between reverse mortgages.
Reverse mortgages. So I actually didn't know this was a thing until you had brought it up to me.
Really weird. I think I was destined to be in real estate from a young age. When I was a kid sitting on the floor of my parents' house watching TV and Power Rangers, I was always fascinated by the chip reverse mortgage commercials. Right. I was like, how does this financial tool work, and should we be utilizing it?
Regular thoughts of it.
Yeah. In between, do I like Red Ranger or White Ranger better? That was, and I always remembered Kurt Browning wasn't in the scene, but it was definitely Tom Selleck, and there was always this older, more mature actor, and I was like, I also want to look like that when I'm older. And do I need a reverse mortgage? So I brought this topic up to you, and you're like, what? But this is a $6 billion industry.
Right.
And I don't know what generation we are. Generation X?
No.
We're
We're
boomers.
millennials.
Millennials?
Are we millennials?
I'll go with it.
Let's run with it.
Well, our target audience is going to probably be having to have these conversations with our parents in the next 10 to 15 years.
Yeah, and legitimately, I'm actually really happy that you brought this up because it is something that sounds amazing off the hop, and then you slowly peel the onion back.
Yeah.
And I'm happy I ended up diving as deep as I did.
We did, yeah. You did a really good job on this one. So we're going to kind of go over all you want to know about a chip reverse mortgage, how they work, the pros, the cons, use cases, non-use cases, alternatives.
Yep.
You really did a good job. So
this is a good. If you thought about it, if it sounded appealing, chip reverse mortgages sounded appealing. Yeah. Then take a listen to this.
If you saw Kurt Browning in his beautiful little hat walking the streets of Hamilton and you're like, maybe this is my life. Well, stay tuned.
All right. So let's start with what is a reverse mortgage to just begin with.
Yeah.
And it's basically a loan that's available to homeowners that are age 55 plus, and it allows them to convert part of their home equity into cash without actually having to sell their house. And this is the kicker, is that you don't have to make any monthly payments.
Right.
So you get to just basically have this
windfall of cash.
Yeah, a windfall of cash, and you don't have to worry about paying monthly fees for it.
I'm sold. So you're telling me I'm getting free money out of the equity of my house, and I don't have to pay this back?
Oh, absolutely.
Wow.
Not only that, I got one more for you.
Who?
It's tax-free.
Sign me up. Right? And I think that is the big hook that gets a lot of people's interest. I know 8-year-old me watching Power Rangers was like, let's get some equity out of this house and buy myself a Mighty Morphin Power Ranger myself. You hit it right on. I think you got a very, very kind of really good definition of it. The Canadian product that's often advertised is called the CHIP reverse mortgage. There's many companies that offer it, but CHIP is the most popular, and they're the ones who have the Kurt Browning spokesperson. Do you know what CHIP stands for?
No.
Right? I was like, what is this whole CHIP? Canadian Home Income Plan.
Oh.
which in itself is a little bit of a misleading.
Oh,
You throw the word Canadian in there, you're like, oh, is this a federally
elbows up,
Oh,
right?
right, are we doing our thing? Home income plan. It's like, does the government, should they be giving me money? I don't know. Those were kind of the thoughts I had.
Interesting, yeah.
I think chip is a much more digestible term.
It sounds very nice.
Blows right off your tongue.
Yeah.
Ooh, I'll take a chip. Why not? Speaking of hockey references, do you remember Lay's chips?
Yes.
Bet you can't have
Yeah,
just
yeah,
one.
100%.
Mark Messier.
That's it.
And there was a Russian character.
You remember who was in the commercial?
Aw, dude, I've got the goldfish mentality. Actually, I think goldfish don't.
That's the opposite, yeah.
Okay, yeah. I'm reverse
Reverse goldfish.
Oh, buddy.
Oh man,
We're in for a good one.
On fire today.
All right, back on track. Who is eligible for
Yes.
this? Talk to
Okay.
me.
Yes. Yeah. So it's kind of it's obviously advertised to the older generation,
Aging population. Yeah.
aging population. So who's eligible? You have to be 55 years or older.
Okay.
It needs to be also your primary residence.
Okay.
So you pretty much need to be living there at least 6 months of the year.
Okay, so you can still be a Florida
Yep.
snowbird.
You can be a snowbird as long as you have one property and it's your primary.
Yeah, cool.
Generally speaking, the minimum appraised value of the house needs to be $250,000.
Okay, so they want to see that there is a substantial amount of equity if they're going to be giving you this loan.
Yeah, which makes sense, and also not too hard to find over here.
Right.
And you don't need to have your home fully paid off.
Okay.
But you do need to have a large portion paid off, ideally 50%.
Okay, so you can still have a mortgage on it, but it should be under 50%.
Yeah, you don't have to be somebody who's paid off their house in order to
Utilize this.
Yeah.
Okay, awesome.
And here's kind of the key thing here. No income needed.
Uh-huh.
So we're going to bring this up again probably later on, but no income needed is probably one of the key differences.
Especially if you're retired.
Yes.
Because it's very hard to get a mortgage or an increased line of credit if you have no income coming in.
Right. And this is kind of what makes it different. Like if you hear, I can pull equity out of my house, why don't I just get a HELOC? This is the difference.
Right.
In HELOC, you need to be able to prove your income and you need to have good credit. With this, you don't.
With a reverse mortgage, yeah, no income needed. That's huge. And then talk to me about terms. So what are we looking at?
So
How do you get this money?
Yeah. Okay. So pretty much you can, the rules of the terms are you can borrow up to 55% of the home's appraised value.
Okay.
It can get paid out in 3 ways. So the first way is just straight up a lump sum of money.
Payday. Dollar bill, y'all.
It sounds fantastic. Yeah.
Yep.
Just get a big chunk of money, hit your bank account all at once. It could be useful for stuff like renovations. If you're doing, like if you have a big expense coming up and you want to just take a lump sum and, spend it. But you have to watch out because the second you take that money out, if you're taking all of it out at once, you're getting charged interest
On that massive lump sum.
on that massive lump
We're
sum.
going to get deeper into some of the cons, but keep that in mind.
Yes, that's right out of the gates. Number 2 is you can get it out in scheduled advancements.
Okay.
So you can do quarterly or monthly payments pretty much, which sounds nice.
Yeah.
If you have a pension and you're supplementing your pension or whatever, you don't have to, basically it's the most cost effective way.
And it's a little top up. It's not, I'm very cautious when people come into big windfalls of money. I've seen it so many times.
Right.
If you don't know how to handle big sums of money, you're going to fail.
Right.
Like it's very few people are good at handling large sums of money.
Yeah. Yeah. I can absolutely see that.
Especially when you've been struggling for so long, it's like the temptation's there. Oh, here's $500,000.
It goes away really quickly.
Casino-rama, baby.
Well, you hear so many stories about even sports.
Yeah.
It's all over the place. Athletes always have the thing of I made it all and I spent it all.
Lottery winners, you see it all the time. There was a whole TLC show dedicated to how the lottery ruined my life.
Right.
Big windfalls of money is never.
It's dangerous.
It's very dangerous. You need to have a lot of discipline. So I think the scheduled advances is a good
Alternative.
method. Yeah. And there's a hybrid, I think.
And it's also cheaper, right? Because you're not taking out the lump sum all at once.
Right.
And then there's a hybrid option as your option 3, which is basically I'm going to take some of it out right away, and then also I'm going to have my installments. It's the best of both worlds, pretty much.
And in all 3 of those examples, what's the big kicker?
The big kicker. So the big kicker is there's no monthly payments.
Right. So whichever option you choose, that money's either coming to you every month or one lump sum. You don't have to think about even paying it back.
No, it's just coming to you.
Yeah.
Sounds fantastic.
Well, that's the cherry that everyone's focused on.
Yeah.
But that is a disaster cake waiting to unveil, as we're going to get into.
Yeah. So pretty much the question that's kind of how do you pay it back?
The follow-up question, yeah. It's like,
yeah.
okay, so like nothing's free in life.
Yes. This all sounds great. How does the lender get paid back?
Right.
Where does this money go?
Yep.
And long story short, the loan is repaid when the homeowner sells, moves out, or passes away.
Yeah.
The house.
Yeah, and there's a few other pitfalls that can come up even before those incidents happen. But this is the genius of this plan is, spoiler alert, we're all going to die. So this loan will be paid back against in most markets, appreciating asset. So like, I got to give whoever came up with this kudos. This is a very interesting financial tool.
Yeah.
Not one I'm a huge proponent of, but man,
I know it is. It's interesting. And the way it's laid out, you think to yourself like, okay, actually there's a lot of good.
Yeah.
There's a lot of good.
Big brain energy went into that.
I also will say, as I think we're going to probably talk a lot of negatives throughout this whole podcast, but there's some case uses that this could work for you.
Hold your horses.
Okay.
At the end,
we'll go into that.
Some very unique scenarios where this might actually be something you
totally use. We'll get through it, but to start, before we get there, I wanted to we did a pros and cons list basically. And I think it would be a good idea if we did a kind of back and forth as to I'll list the pro, you list the con,
like dueling guns.
Like dueling guns. Because let's just kind of go through one by one and we'll kind of pick it apart a little bit.
Like it.
So the first pro, which we already made mention to, is that there's no monthly payments. It provides financial relief for somebody who's got a fixed income, like a pension or something along those lines, and you don't have to pay it back. That's a big one.
Well, you know what comes with that, partner? Accumulating interest. You ever hear of negative amortization? Because that's what you're getting into, partner.
There we go.
This is, jokes aside, this is the really scary part of this product, is that we always speak of compounding interest in a positive light where it's really good to have that. Well, this is actually working against you.
This is the opposite.
Because you're not making any payments back. So you're actually growing the debt you have, and that interest is accumulating on the interest already charged.
Right.
There was a really good example. We've got some sources in the show notes that we're going to link to, but Garth Turner and The Greater Fool did a really good deep dive on this as well. And this is a scenario they used. If you're a 60-year-old living in a $750,000 house with no mortgage and you borrow $250,000 at an interest rate of 7.5%, which is as advertised today, that's not a far off rate. Within 10 years, that $250,000 has grown to $515,000.
Yeah, which is it's doubled.
It's doubled the amount you owe.
Yes.
You hope in 10 years to pay off. Like that's the goal of our generation of life right now. You take a reverse mortgage, it is as advertised. It reverses, it adds to your debt, not deducts.
Yep. Yeah, it's a dangerous game to play. You have to be very, very, again, there's not many cases where this is going to be the number one choice.
Yeah. So you have to be very aware of some of the
dangers.
The dangers. Yeah. Oh, are we entering
the danger zone? It's been a while.
Yeah. Not a week goes by where Adriana S. doesn't reference the danger zone. And it's usually around, this week it's been around my mustache.
Yeah, that's the danger zone.
Our future. Is it the danger zone?
Oh, I love it.
All right.
Do another pro.
Yes.
Another big benefit that they advertise. Tax-free funds. So basically the CRA would see it as a loan advance, not income. So even if you're getting paid in monthly installments, it's not something you have to claim. Pretty much you're getting charged for it already, and the government's not going to double charge you for it.
Right. Now listen here, partner. You got me on the ropes with that one. I don't have a counter argument to that. That is a universal truth and one of the few pros of this is you get this lump sum or however you decide to take your money tax-free. That's good. However, there is a cost for this windfall. And this product does come with higher interest rates.
Yes.
I checked as of this morning, it was 7% for a 5-year term.
Right.
So, a typical mortgage rate now, a fixed 5 year is about 4%. So
you pay a premium.
You pay a premium to get that windfall up front.
Yeah. And I mean, like logistically, I can justify it if I'm somebody who's looking at from the outside. You don't make any monthly payments. They're going to lend you all this money.
There's a premium.
Therefore, you're going to pay a premium.
Yep.
And it's going to be a lot of money. It's probably going to be a lot more than you'd get taxed realistically.
Yeah. Very well said.
Let's go to the next pro.
Okay.
You can stay. Actually, this one I like. You can stay in your home.
Yeah.
So for alternatives that we'll dive into the alternatives later. But one of the solutions that people you can pitch is downsizing.
Sell your house.
Sell your house. Move into something smaller, and therefore you don't need to take the equity out of your house.
Yeah.
You can stay in your home and run it to the end of
Yeah.
end of your life cycle of that house or yourself.
And I'm going to say you're 2 for 2. It's hard for me to counteract that. This is a very emotional decision for a lot of people I talk to. They choose to want to die in their home at the end of the day. They didn't want to go into a hospital or whatever type of care is out there. And so this is a very, I think, emotional driven decision.
Totally.
Like, yeah.
If you're not, if it's not the most fiscally responsible, but it's I think it's your emotional, it's your comfort and if you're old enough and it's really just like you're not wanting to move, this is a nice benefit.
So here's my somewhat of a counterpoint. And if I've busted my butt my whole life for my house, I really don't care about inheritance for my kids. I could see that case argument. I mean, I think I would if I had kids. But there's going to be less equity left for the heirs of your home.
Right.
A reverse mortgage, and this is right from their website. I found this copy. I thought it was so well said. A reverse mortgage. Should I do a Tom?
Oh, can you do a Tom Selleck?
To be honest, I've never watched Magnum PI, so probably not. I'll just do my Mark Savell voice because this is an important point to share. So on the website, it says a reverse mortgage is a flexible financial solution. It will help so that you will have less cash outflow on your monthly income and will not be reduced by paying regular interest or principal payments. The amount you owe will only be due if you decide to move or sell. So it's taking this thing and putting into the far out future. You don't got to worry about this now. Go live your golden years out. You've earned it. You've worked for it. Go on.
Yep.
If little Johnny or little Susie was banking on getting that house or potentially carrying on the family tradition, they could be in for a rude awakening at the end of it.
Right.
Now, if you hate your kids, hey, YOLO, go live your life.
Yep.
Right?
Very much so. This is, again, there's going to be a very specific person that this can work for.
Right.
This, it's not, but it's very specific.
Yeah. And so this is my con. It's a reduced inheritance.
Yeah.
At the end of the day, you are, and I heard this quote actually just this week, separate from this topic of a good man provides a future for his kids. A great man provides assets for his grandkids. So you're not even thinking one generation. You're trying to financially plan to think 3 or 4 generations
Your whole
to set your family up for future.
I love that.
I thought that resonated so well with me. And I'm sure whoever came up with that quote does not have a chip reverse mortgage because there'd be very little inheritance left for their kids if they did. Next point.
Last point of the pros.
Yeah.
Flexible use of funds. So this is another big advertisement that they always push is that the funds, when they give you your funds, you're not limited to what you spend it on.
Yeah, there's no restrictions.
No.
Yeah.
You do whatever you want. You go to shopping spree. You can buy yourself a boat.
Yeah, buy a boat. Another terrible asset, which I once owned, and I could back it. It was a terrible investment.
We're going to talk about that.
No, we're not. That is for episode 100. Mistakes I've made. Bought a boat.
But that's another thing that they push pretty often.
Yeah, and so much of our perspective, or at least mine, is coming from a sub 40-year-old saying like be financially responsible. I might have a very different tone when I'm 75, 80, saying, you know what, I'm going to buy that bike, I'm going to buy that boat, I'm going to take that trip. So I get that, and it's very appealing that there is no restrictions on what you could do with the money.
Yeah,
totally. I mean, there's legal restrictions. You should not go to Colombia and indulge in the local hobbies. As some may at 75, I don't know. But here's my reversal for it. The fees and penalties needed to generate all these wonderful vices that you can go enjoy is incredibly high. I'm going to say borderline predatory in the way that the charges are. I mean, it's not credit card rates of 20+%, but the fees and penalties to set up this program are very high. We're going to get into some of those up ahead, so I won't get too deep into it, but I read somewhere like some of the setup costs can be 2% of the assessed value of your home.
Right.
Plus. Yeah. And shop around, because I did find some companies are a little bit more competitive in that. But whatever you settle on, expect to pay a bit more.
This is a good segue, I think.
Yeah.
Because our next section we're going to talk about is the sneaky, unexpected costs that come with this.
Red flags.
We're talking about, this is a list of kind of expenses that could come out of nowhere that can shock you, other than what we've been kind of alluding to.
Yeah. So I'll say, who won the duel? I think I won the duel.
You definitely won the duel.
Okay, thank you.
Yeah.
You had me. It was you had me on the ropes, but I did the old rope.
Yeah.
You thought you got me? All right, that duel has been settled. So now let's come together as friends, bleed blue, elbows up, support the Leafs, and let's talk about some sneaky, unexpected costs.
All right. So the first you just alluded to, which is the upfront fees.
Yeah.
This is appraisal fees could be a part of it, legal fees, independent legal advice if you're looking to just speak to somebody about what you're getting into.
Yeah.
Administration fees by
Yeah.
the lenders of just the setup costs in general.
They just keep piling on.
Yeah. It's not cheap. It's definitely not cheap.
Yeah.
You said 2% of the assessed value could be.
Yeah. Shop around. That's not standard for all of them, but I did see as high as 2%. So you do the math on $1 million house. That's just the setup.
They're starting you off strong.
Yeah. So this whole intent, or I guess the whole strategy behind this loaning, if you're thinking of the benefits of the actual lender, is to take as much of that equity in your home as possible. And the opportunity cost is allowing you to spend that money today.
Yeah.
So again, see both sides of it, but keep in mind the lender is really taking a lot of that equity in their own pocket before you see any of it.
Yes. Yeah. Number 2.
Yes.
Interest accumulation.
It's that negative amortization we were talking about.
Yes. This is obviously it's going to compound over time.
Yeah.
So as that number gets bigger, that percentage gets stronger.
Yeah.
And by the end of it, you're going to bleed through your equity pretty quickly.
Yeah, 100%. And this is, Warren Buffett's a big proponent of the compounding interest and all the benefits to it. So think of every positive thing Warren Buffett has said. Now flip it on its head. And this is the issue with this type of program.
Yeah. So those are the 2 obvious ones. Here's one that we haven't really brought up yet.
Okay.
Number 3, early repayment penalties.
Yes.
So what if you do want to move by the end of it, or you're 4 or 5 years in and you're like, you know what, it's time for a new place.
Well, let's say you're under 3 years, because that's the target number that I kept seeing.
Right.
There's a whole other set of penalties if in 3 years you die, don't use the program, or need to sell, or decide this program isn't for you anymore.
Yeah. Dangerous. Dangerous. Some lenders might waive this. I will say. I think it's really individualized.
Right.
So just you have to read through your contract and make sure you got the proper advice when you're going through it in the first place. But yeah, these could be huge.
Yeah, that's a big part of it. These repayment penalties. So it's like, you've committed to the program, you think you've gotten your money, and I get it from there in too. They're like, well, we've advanced you all of this. We've have our schedule of payments. This is our anticipated profit. And now you've decided to change your mind out. Whoa, what's going on here?
Yeah, totally.
This might be a very product specific. I can't recall which one I was reading, but if you have to leave your house for 12 months or more, and let's say it's for medical issues, they could force your hand to have to sell it.
Right. This is a big one too.
Yeah.
It's also you have to be living in there at least 6 months of the year.
Yeah. So you can't just, go live with your kids, which is could be a common scenario where it's like, okay, I need the help of my children. I'm going to go live with them, et cetera, et cetera. Well, you're out of that house.
The dangers of what they can do. You want to really make sure you understand what you can and can't do once you take this on.
Yeah. You know who I bet really doesn't like this program? Dave Ramsey.
Oh man.
Dave Ramsey.
Oh man. This goes against everything Dave Ramsey.
He'd definitely fight Tom Selleck over this.
On
program.
this one? 100%. Fist would be up.
And he would win. Dave Ramsey's not just a financial guru. Home maintenance. Let's get into that.
Yeah. This is an interesting one.
Yeah.
So
I think this is a bit of a gray area.
It totally is. So one of the things that's stipulated typically is that you have to maintain the home in good condition.
Right.
And keep up with your property taxes and insurance payments.
Yeah.
If you don't, you could be forced to sell.
That's a good point, because when you start hearing about all this, air quotes, free money coming in, you might be thinking, oh, well, this relieves me of paying property taxes, maintenance fees, or whatever else I'm dealing with in my home. No. You still have to pay those.
Yes.
And if you fall behind on any of those, they can come in
and sell underneath you.
Yeah.
Which and again, it's the one thing that's really gray is the home maintenance requirements.
Okay, so funny story about home maintenance. When you take out a mortgage, we're not talking reverse mortgages, like regular mortgages. Thank you. One of the promises you make to the bank is that you will keep your home in good standing condition. And I remember this from real estate school. Let's say you grow your grass up and it becomes a cow grazing yard. They could come in and say, if you don't cut your grass, we could take back your house.
Crazy.
Does it happen? No. But this is kind of
it's in the same vein.
And it's a good reason. I think
they're giving you money out of the asset. This is the asset that now both of you are.
They expect you to maintain that asset. I think that's a fair trade-off. But nonetheless, easy to say is under 40-year-olds, when we're talking about those elderly in life, mobility might be an issue. It could be hard to upkeep.
Totally.
I get it. So
Number 5?
Yeah.
Shall we?
This is
the big world of like,
Yeah.
yeah. This is what differentiates, I think, what makes this a good idea or a terrible idea.
like the Leafs going into Game 4. This could be the final nail in the coffin if you're deciding if this product is right for your parents or yourself.
Totally.
Yeah.
Estate settlement delays or disputes.
Yeah.
So funny. So what happens when you die, basically? Yeah. This is interesting. They usually give you a 6-month window.
Yep.
To pay back or sell your home.
Yep. To pay back the loan. So say you're dead. So it's not you.
No. It's whoever you've left it. Yes. Whoever's taking care of the place now.
The estate.
Yeah. So you get 6 months, which is
not a lot of time.
Not a lot of time.
Yeah.
They give you some to decide what you want to do. And you can either sell it. You can, maybe there's another family member who can take out a mortgage and pay the loan back. Yeah. But you have 6 months to make this decision and get it to happen.
Yeah.
And actually, I'm not 100% sure. I'm assuming penalties take place at this point if you go beyond the 6 months.
Oh,
and they're gonna be hefty.
Yeah, I definitely think that's in the wheelhouse of this program.
Yeah. So this was a question that I had since the beginning of this.
Yeah.
Because yes, we've lived in a time for so long that a house asset generally appreciates over that long period of time. But what if the loan balance starts exceeding the value of the home itself and you can't really pay back the full amount?
That's a very good point. In the last 3 years, the market conditions have changed.
Yes. So the answer, which I was surprised about, I thought this was going to be worse, but the borrower, you don't have to have your heirs pay for that difference. Basically, what happens is there's mortgage insurance that's built in.
Sure, there is,
and
you're paying for it.
In which case, they will cover as long as you sell for at least 95% of the appraised value.
Right.
So you can't just sell it for $1 to a family member and have insurance pay for the rest of it.
Right. So there's still stipulations in that, but at least that gives you. I don't know. It's a double-edged sword. Like I see it as a good safety net, but it's a safety net that still benefits the lender at the end of the day.
100%. Yeah. At the end of the day, 1,000,000%. They're still safe. You're still paying for the insurance.
Yeah. And like we're talking about this as such a transactional way, like and someone dies and then you have 6 months.
No. It's not like that in real life.
The emotion element is the secret sauce in this that's gonna.
Let alone if you surprise somebody. Yeah. If nobody knows you've taken it and all of a sudden you pass away and.
Yep.
Hey, by the way, there's this gigantic outstanding loan, even though he's owned it for 100 years.
And I could tell from experience from a lot of seniors I've spoken with, a lot of them have told me in private, yeah, I'm using this program. My kids don't know though.
Right.
Because there's a lot of reasons. It could be like the shame of telling your family. It could be the feeling of selfishness of like, oh, I took the money out to benefit or whatever the case may be. So it's a touchy subject, finances in general, and let alone when a senior's got to explain to their kid, this is why I did that. It's my business. I don't need to tell you that, right? So this could come as a huge shock to the heirs and the kids of a house.
Yeah, totally.
So why would they want to do this? The website lists a lot of really good reasons. It could be for traveling, for home renovations, which we touched upon. And this is, I think, the most probably realistic case study for it, cash flow.
Right.
Seniors, it's tough out there. It's expensive. We see it every day. And where are you going to get this money from if you don't have it?
Yeah.
And then there's I hate my kids. I worked hard for my life, and for many reasons, there's a lot of fractions between families, and the seniors may just feel like
it just is what it is.
Yeah, my life, my way.
I don't need to pass anything on.
That's it.
It's not a family home I need to give to the next generation. It just when I go, it goes.
Yeah. So let's maybe wrap this up with some alternatives.
Yeah. So let's go. Yeah. Let's do alternatives.
Feel good note. Yeah. Other things.
This is exactly. Yeah. The alternatives are important because I think you have to consider all of this.
Yes.
Before really diving into the reverse mortgage.
The reverse mortgage should be plan H.
Yeah.
It should be really down on that alphabetical list.
Through that alphabet really quickly.
Yeah. It's not necessarily Z, but it's like middle of the pack.
Yeah.
Plan H is what the
chip. Yeah. Okay, so the very first and kind of probably the most obvious when you hear what this is in the first place, HELOCs.
Yeah, get a line of credit.
Home equity line of credit.
Yep.
You still borrow against your house, but it's not a reverse amortization. You have to make your monthly payments, but at least you have some money to pull from if you need it in those tight situations.
Yes, and I want to highlight another product that you should be exploring. We were talking about this earlier in the week. I know Scotia has it. TD, I think, has it as well.
I like that you're bringing this up.
Yeah, it's the STEP program for Scotia. They have the STEP program. And so how that works is, and this would apply for any senior who still has a mortgage on their house.
Mm-hmm.
as they're paying down that debt, they're building up a line of credit that they can access and use.
Yep.
So if you started with $1 million, you paid down $250, you have access to that $250.
Yep.
There's interest rates and a whole other host of things to explore, but that's a built-in line of credit that was created by you just paying down your mortgage.
As you got the mortgage in the first place.
Yeah. And you usually have more favorable rates. Okay, I'm going out on a limb on this, but I believe you could roll that into your mortgage and then pay the same as your mortgage.
Yeah.
There's a lot of qualifications, but I know one of the programs has that.
It is. I actually just had a client recently who took this because the interest rate ended up being better on this. TD holds a flex line is what it's called.
There you go.
And it was a better qualification by the end of it and a better interest rate by the end of it.
Yeah. And listen, we're not saying, leverage yourself to the nines.
Yeah.
But having that safety net when unexpected things come up.
Yeah. You don't have to spend it.
You don't have to touch it.
Right. You're just building up that line of credit in case you need it in the future.
Yeah.
Or maybe you can use that to purchase another property if you're starting to build something.
Yeah.
Well, but we're not talking about that world of things right now, but yeah.
Use case for a senior wouldn't be to do that,
Yes.
but for cash flow, renovations, traveling, etc., definitely you want to be looking, I think, at a line of credit before you're looking at a chip reverse mortgage.
Totally. Yes. Yeah. Thank you for bringing me back
No,
to this conversation.
That's what we're here for, brother. That's what we're here for. The dueling days are done. We're in the love part of the podcast.
All right. What else? We
Downsizing.
Downsizing.
Hey, I know 2 realtors who'd love to help you downsize.
Absolutely.
Yeah. Get you out of that old house and put you into a new condo, maybe a little bungalow on one floor.
Nice and simple. Lower your monthly expenses.
Lower your expenses, less cleaning, get maybe some new furniture for your place, cash out of a big asset. I don't know the exact stat, but there's a wild number of how many empty bedrooms there are in houses as empty nesters become more prevalent. These are just dead rooms that nobody's using.
Yeah.
I mean, you could have a train hobby. You could use that.
Airplane painting hobby,
Airplane
which
painting.
I walked into recently, actually.
Really?
Yeah. All over the place.
Right on.
Yeah.
I used to be a model builder.
Oh, get out of here.
Yeah, those little cars.
Did you have like the
Tester's paint set?
The microscope and...
Oh, yeah. No, I have good eyes. I used to use a toothpick.
Oh, nice.
I love that. I think if I am blessed with kids and then those kids move out and have their own lives and I have empty rooms in my house, I'm definitely making an F1 track with the little...
I totally can see that for you.
That's what I think I would want. Yeah, and it'd be AI generated. This is a long ways away from happening. But downsizing, I think you hit it right on the money. Cash out of your property. If you still want to be an owner, move into that. Or also look at maybe alternative like assisted living where you pay a rental to these companies and they provide you with meals and healthcare and all that other stuff.
Right. Yeah. Okay, here's another one. So if you're trying to supplement your monthly payments, renting out a part of your home.
That could work.
Maybe there's a separated basement that's not really being used very much except for your model airplanes. And you can just put those in the garage or something along those lines.
Right?
But renting out a piece of your home could be a way that if you're struggling for that extra cash, you could manage it.
And in Toronto, at least, you'd also be eligible to run it as an Airbnb because you're currently living in your home.
It's your primary residence.
So it's one of the case studies that could actually work really well for you.
Right. If you don't want somebody long term, you just want somebody in and out and just kind of come whenever you need it to happen.
Yeah.
Yeah. Cool. Lastly, this is a tougher one. This could be a tougher one for a lot of people, but talking with family. If you're hard up for the cash, it might be a good idea, even before considering a reverse mortgage, to see if anybody can help you out.
Yeah. Maybe a grandkid can move in with you and help assist it. Maybe a young family you can do like a shift where the senior moves to the basement and the family lives upstairs and you kind of have everyone under one roof.
Yeah. Hey, maybe there's a way you can work it out where a family member will slowly buy the house.
Yeah. A rent to own scenario type thing.
Yeah.
You could be some creative funding with that. I like it.
Yeah.
Yeah, so there's other options.
Yes.
Don't let Kurt Browning's beautiful bald head and really good figure skating skills woo you, or Tom Selleck's mustache. There are other methods, and you should explore them before using that.
I love it.
But we did say there's some like really niche case studies where you might want to actually implement and use the reverse mortgage.
Yeah.
And I think one of them that we had come up with was, let's say you own multiple properties. You might just want to cash out of this one before trying to sell those and dealing with the capital gains.
It's not a bad idea.
Yeah.
And I would be curious if there's any stipulation inside of a contract about this.
How many properties you own?
Yeah, if there's differences, I would be curious to learn a bit more about that. But that's a great case study.
Yeah, it's again we're not saying this is an X for everybody, but I think from my perspective, at least 95% of people should probably look at alternatives before using this.
Yep.
But something like that, or something where you're just like YOLO, like I'm just going to cash out, or maybe you have no heirs.
Right. Yeah. I mean, the biggest thing is that I think the takeaway is if you take this, there's a pretty good chance that house will not be yours by the end of it.
Exactly.
By the end of it, or in your family,
Like
by
your
the end of it.
estate, yeah.
Your estate won't be in the family by the end of it.
Yeah. Or very little value will be derived at the end of it, I guess.
Exactly. Yeah. So you just have to go, if you're going to consider this, just go in knowing that. And maybe you want to have those conversations with family before you make this decision, because you don't want to be surprising them with a whole bunch of decisions that they have to make while they're mourning or whatever the case is.
Yeah. So key considerations, I think this ties in perfectly. Talk to your family first.
Yeah.
I think that's the first place to start. If you are going to take the path of a reverse mortgage, make sure they're in on it so they're understanding of what your wishes are and why you're doing it. And that can open up a bigger conversation.
Yep.
You'd probably want to consult a professional.
Definitely.
I don't think we're the guys I don't think a realtor is who you should be talking to, but more a lawyer.
Somebody who's,
accountant, tax planning. Yeah.
You want to talk to a lot of people. I think you want to get around the whole.
Yeah. And old
spectrum.
people love talking to people.
Yeah.
Right? So this is like right up their alley.
It's perfect.
It's a hobby, talking to people. That's what I'm most excited for, to become old. Talk to people. Because like I was walking on the Beltline yesterday and the sun was on. I was feeling so good.
You're ready to spark up a conversation.
I would talk to everyone. I saw like these an old lady and her daughter, and I was like, "Can I take a picture for you?" I took a picture for them. I helped the guy open a bottle. I had a bottle opener on my thing. I helped him. He's like, "Oh, thanks, man." I picked up some garbage on the way.
Oh my God.
I'm gonna be a great senior citizen.
Yeah, you absolutely are.
Yeah.
You're in a good mood too. That's a good mood, senior citizen.
Yeah, and if I'm not in a good mood, I'm gonna go to my F1 room and play with my slot cars.
Your AI.
Paint the airplane. I'll call Joey over. Oh man, future flashes.
Future flashes.
Like old Mark and old Joey.
Reverse future. Reverse. Oh, what am I trying to say? No, I lost
Benjamin
it.
Button.
Yeah,
Like
why
reverse.
not? Let's call it Benjamin Button.
Or just like aging.
Yeah,
this is what you're doing. You're just going through the
reverse flashbacks. Is the word I was trying to get out.
It's a chip reverse flashback moment, sponsored by. Oh God, we're getting to the end of this podcast.
Yeah, absolutely. I think the last key consideration is your long-term plans.
I like that.
If you're thinking that you maybe there's a chance you're selling before you pass away, or if there's if there's health issues that you think might spark up and keep you in a hospital for a long period of time,
over 12 months.
Yeah.
If you don't think you're going to be in the house for more than 3 years,
right?
Something else you should be considering.
You got to be having reverse flashbacks.
And I think this is why they gear it to age 55 and older, because you're not a senior citizen until 65. So the 55 point was always like, really? Because I'm only 15 years away from that. But I think the purpose of it is from the angle of, well, we want to get as much equity out of that house as we can as a lender.
Very much so, yeah.
So again, final, I guess, summary is not for everyone.
Yeah.
Small case study for some people, but do your research.
Do your research. Talk to your professionals.
Yeah.
Love it.
Love it.
That's a good summary.
Any salutes?
Salute. Hold on, I want to pronounce this again. Wait, first off,
sorry.
salutes, elbows up.
No, salute the Leafs.
Salute the Leafs. Yeah, well, I meant more in a sense of
elbows up for the
elbows
Leafs.
up for the Leafs.
Whatever political party you're supporting, our elbows are up for the Leafs. That's what you meant, right?
Yeah, that's a good
your
time.
mind, buddy. I got you.
Arete e toro.
Ooh,
I think that was pretty good.
That was very good.
Fluent too.
Yeah, that was very good.
What about you? Are you salutes?
Salute Metallica. Salute James Hetfield. He was at the Leafs game 2. He took a beautiful picture with Wendell Clark, who also has a wonderful mustache. So salute all the mustache men of the world. Lanny McDonald, Tom Selleck.
Yeah.
Salute Kurt Browning. I'm not knocking on your hustle. We all got to make $1, so I'm with you on this, brother.
No more triple cow house.
Triple Cow's House?
Cow's House.
Cow's House. I feel like that's from that movie with Will Ferrell. What was the unique? Do you remember this movie? Blades of Glory?
Blades of Glory? Yeah. Oh, it might be.
With
yeah.
Napoleon Dynamite.
Yeah, Napoleon Dynamite.
What's his catchline?
Yeah, I think that's.
He was such a cultural influence.
He was huge.
Huge.
Yeah.
Gone.
Yeah.
I wonder what he's doing now.
Yeah.
I wonder if he's in a chip reverse mortgage.
He might be.
We know his Uncle Greg is in because he's on White Lotus season 3.
Oh, yeah.
Did you know that?
No.
Do you know the reference I'm talking about?
No, I actually. Well, Uncle Greg is in White Lotus season 3.
No. So White. Oh wow. Okay.
Let's go.
Tanya's husband.
Okay.
Is the Uncle Rico in Napoleon Dynamite.
Okay, yeah.
The guy who could throw a football?
Yeah.
Damn llamas. And he's like, my future is going to be on a big boat in a retired country. And in White Lotus season 3,
Oh, get out of here.
Huh?
Oh, get out of here.
You like that? I save that for the end
That's
of the
pretty
podcast.
cool. Yeah.
That's my little golden salute for those who've listened to the end. Yeah. We should do a Severance summary. I'll be caught up next week. So stay tuned if you want to hear.
If you want to hear what
my
happens
thoughts
in
on Severance.
Severance.
I'm just going to say this. 2 words. Defiant jazz.
Don't get me started.
Oh, love that episode.
So good, man.
Well, thanks for listening.
Yep.
If you made it this far, maybe a quick call to action.
Yes. Oh, if you made it to the end.
Yeah.
I think this is about that time you hit the subscribe button.
Subscribe, like, and comment.
And comment.
And also share with anyone who's been considering a chip reverse mortgage.
Ha.
Right?
I like that.
This episode can be really handy for somebody who's like, oh, but I just wish there was 2 strapping young men in
Leafs jerseys.
Austin Matthews jerseys with like teenage mustaches.
Middle-aged men mustaches.
Middle-aged men or teenage mustaches who could really dispel some knowledge on this somewhat complex topic.
Yeah.
We're here for
We're
you.
here.
Salute us. Enjoy. Oh, this is episode 89.
Oh, yeah.
Yeah.
I guess we'll bring it up at
Episode
the
89.
beginning. Intro
Sure.
piece.
Yeah. But if you weren't sure where you're at, this is episode 89. So enjoy.
Enjoy.
All right. Thanks for listening to the Toronto Livings Real Estate Podcast. You could find more information on how we work over at torontolivings.com. Be sure to sign up for our newsletter to get price reports from over 150 different neighborhoods in the city each and every month.
If you got any value, please like, subscribe, and share with your friends. And if you made it this far, thanks for listening.